Welcome back, everyone. Thanks for joining NYU Grads Daily Podcast. Today is Thursday, July 27th. I'm recording this around 9 p.m. New York time. What a day. So let's jump right into it. I don't think I'm going to be able to cover everything under 15 minutes, but I'm going to shoot for under 20. There's just so much to cover after the federal rate hikes on Wednesday. But jumping right in, what stood out? Before I cover breadth, I want to cover this. So around 9:50 a.m. New York, the 10-year Treasury was up. Just by that, you just know that the U.S. dollar is also up. Usually, Treasury yields or just interest rates in general are in parallel synced with the U.S. dollar. However, the indices were green, and stocks in general were swimming upstream as usual. But right after, I would say 9:55 ish, that's when the sell-off really started to begin. And then around 12:45, right around lunchtime, the selling started to accelerate. So I watch a few things pretty much all day, including like stocks like Apple on my screen, but I also have the NYSE up down advanced declining shares as well as the NYSE up down volume. This gives me a pretty good read on intraday breadth, and it's very hard for institutions to hide when you look at this. And what I use this signal for is more of as like a barometer, right? So if I don't know if you guys are weather geeks, but if you're hiking and you see on your Apple Watch that the barometric pressure drops all of a sudden, regardless of what the conditions are, if it's sunny, if it's windy, but like just a little cloudy, it doesn't look like it's gonna rain. But if you see that barometric pressure dip really fast, most likely it's gonna rain. So this is kind of how I use it. Obviously, I look at long-term breadth as well, but during that day, a lot of the indices and mega caps were up, but breadth was struggling. And sure enough, in the afternoon, the sell-off really started to accelerate, and this basically was a classic rug pull after the Federal Reserve spoke and raised rates yesterday. Going into the close, no one was really sure what the implication would be because the market's closed and Meta reports. But today, in a micro sense, in a weekly time frame or in a daily time frame, it was bearish. But when you take a look at the year to date, it was just a blip, right? When you take a look at the day, it's not even a big deal, to be quite honest with you. The Dow was down 0.67%. The NASDAQ was down 0.5%. S&P 500 was down 0.6%. And the Russell was down 1.29%. When I say it like that, hey, this could be a healthy, small pullback, a pause that refreshes so that we can go to lifetime highs. So you never know, right? Next week we could have a very bullish week and we could just zoom right back up. But when you look at today, it was a very bearish day. When I go look at the breadth numbers, we had 731 new highs. That all happened before noon, before lunchtime. We had 149 new lows. However, when you take a look at advanced declines, you had only 20% advancing and over 76% declining. So under the stocks that influence the Dow 30, the S&P 500, the NASDAQ, underneath the surface of those big mega caps, there was a heavy sell-off today. But looking at some of the big ones, Microsoft down 2%. Apple was pretty much flat, 0.66. But again, watch Apple. I still believe Apple's being distributed very sneakily behind everyone's back, because if look, Apple is owned by over 500 mutual funds / ETFs. It still is a huge component of the S&P 500 and NASDAQ 100. Everyone owns Apple, okay? And if you, let's say, had, I don't know, $20 billion worth of Apple shares that you had to unload, how do you do that? You can't just go to the market and sell. You have to have a long-term strategy to get out of Apple, and it's not easy. Everyone is in it. And I think that there's some heavy holders of Apple slowly selling this off. But that's just my intuition from looking at the chart, from looking at the negative divergence on MACD and stochastics and RSI. But it's not 100% given, right? These are signals, but it's just a hunch that I have. Let's see. Google was pretty much flat, 0.16. NVIDIA up about 1%. Amazon flat, 0.08%. Tesla was a little weak, down 3.27%. It's getting a little weak here. There's a few Fibonacci levels where if it does not hold, we can see some acceleration. But there's not much green on the mega caps and techs other than like Meta. There's a few healthcare companies that I'll mention later, like an AbbVie. But Meta, as much as I hate Facebook as a consumer and ads following me everywhere, they reported strong and they're doing well. You can't deny that. And let's see what else was up in semiconductor land. AMAT was up 5.12%. McDonald's was up 1.8%. But outside of this, everything was pretty much red. When I go and look at the sectors analysis, everything was red. Communication services was a little green, but real estate down 2.1%. Utilities down 1.8%. Basic materials down 1.4%. Everything was red today. But who knows? Tomorrow we can open up green, right? Like someone can say something like a Fed head and off to the races. The futures are muted. It's the Dow 30 is up 24 points. S&P 500 futures is up 6 points, and NASDAQ 100 is up 38 as of 9/11 New York time. Let's take a look at some of my notes here. So I covered breadth, and throughout the day I was tweeting about Apple. When you take a look at like maybe the last week or so, Apple has been carving out a balance area between 192 and 195-ish, and it was kind of just going back and forth. And the last few days, it broke above it with some of the bullishness that we had the other day. But today, it was coming back into that balance area, and I had tweeted, hey, if Apple breaks below 195, there's a good chance we'll go back to the middle of the range, which is typically the high volume node. For simple speak, it's the most amount of volume of shares exchanged in that range, and it just becomes a magnet, right? Because that's where the most traders have agreed on a price. So that's where it went, and then throughout the afternoon session, it went even further to the bottom of this range, closer to 192. It held there. Typically what happens at the balance area extremes is where you'll have potential initiative moves. So if the price action tomorrow breaks below this, it's either going to fake out breaking down below and just zoom right back into the trading range, or it's going to trade initiatively out down from that range, looking for a new area where traders agree, hey, I'll sell you my shares of Apple for I'm just making this up, 185, and then buyers will say, no, that's still too expensive. All right, fine, 182, and then it'll carve out a new balance area where traders all agree. So watch out for that area tomorrow, like 192. What else can I cover? Oh, all right, so I'm going to cover AbbVie. Very similarly, if you pull up an AbbVie chart, the ticker is uh, ABBV, Apple Boy Victory. When you take a look at this chart on the daily time frame, starting back in June, it started to bottom at 132, and then it bounced to 138-ish. Then it slowly started to dive to 130, formed a quick V bottom, then bounced all the way back up to 137. Then it slowly started to creep down to 132, and then it went back up to 138. Okay? I hope you're still following me. But eventually, it broke out of this range. It back tested to 140, and then it gapped up higher recently on earnings. So they raised guidance, and this company pays a pretty good dividend. Very strong company. If you watch television, like that still has ads, like not Netflix, you're gonna see AbbVie drugs on television all the time. Their main drug that they advertise quite a bit is called Humira, and it services many indications or ailments. But not a lot of people know this, but AbbVie owns Botox. Now, I have nothing against Botox, right? It's a huge business. And if you have Botox, that's great, But the reason why I'm bringing this up is Botox is not covered by healthcare insurance. So all of their Botox business through their doctors that administer Botox, and Botox is not just like, fillers, but Botox has a lot of other options, a lot of uses, even for like migraines, skin as well. And it's all cash, right? It's like, it's an all cash business. So not many people know AbbVie owns that as well. Very strong action here. If this bullish run in AbbVie continues, there is a gap that it can close at 160 from here. And it could go as far as like 165 to retest that level. But keep an eye on AbbVie. I am not your financial advisor. I'm just sharing what I'm seeing in the charts. Very strong action in AbbVie. I mentioned Meta earlier. It finished up 4% again. I'm going to watch this, right? Like, very, very impressive for Meta to be swimming upstream when everything is getting sold off. So kudos to Zuckerberg and whatever they're doing. They are tracking us to infinitum for all these ads. Aftermarket, Roku is up 8% after earnings. Now, keep in mind, I'm pulling up this chart. Roku has been slammed, right? Like post-COVID. When I pull up their chart and like kind of zoom out for, the whole picture, yes, it's up now, right? It was up 3.75% for the day, and then after hours is up another 8%. I actually made some money on the short side on Roku, and that was like around at 125 on the way down to, what was it, like September-ish, when it was like close to 50. And then I bailed on the position, but it kept going. So it's bouncing from 31. 29-ish is the low, but it's bouncing from like a $30 level. So now it's at 75, right? You could have doubled your money if you somehow caught that bottom. And yeah, the moving averages are crossing bullishly. Who knows? Maybe Roku can start this climb back up. Maybe it'll go back all the way back to its lifetime high of like 400 and something dollars. Do I think that's going to happen? No, but you never know with all the Wall Street bet crowd and meme stocks. Who knows? But yes, Roku, put it on your radar. It is coming up the right side. It looks very bullish, but just know that this stock is coming from $450 plus from 2021. Let's see what else stuck out. Crocs. I've never owned a pair of Crocs. I'm more of a Birkenstock wearer and consumer, but Crocs is down 14.5%. And this chart looks pretty ugly, to be quite honest with you. It's a huge topping pattern. The 50-day moving average is about to cross below the 200, and if this area breaks right here, which is already breaking, this can easily go to like 65. For right now, it's at $102. Again, do your own homework, but this looks very, very bearish. Also, kind of looking at the buy now, pay later companies like Affirm Holdings, they're down 7.39%. Kava, the recently IPO'd Greek quick serve restaurant, down 3.28%. I already mentioned Chipotle Grill. eBay, pretty strong consumer company, down 10.43%. And it is hugging this trend line that dates back till 1998, man. Holy, I'm going to post this on the show notes. eBay looks like it's in deep trouble here. It's at $43.71. If this accelerates, this can go down to like $20 with nothing underneath. Let's see. I'm going to just cover the home builders. So I actually got an email today, asking what's the difference between IYR and ITB. So IYR consists mostly of REITs, like commercial companies. You'll know, like Simon Property Group. Most of the malls you would go to is owned by Simon Property Group. They're in IYR. Prologis REIT, American Tower REIT Corp, Equinix REIT Corp, Crown Castle Inc., Public Storage REIT. That is what IYR is. And then when you look at XHB, those are the builders of homes, like the homes that you and I buy. But with that said, just going through this, the home builders are still hanging tough. They're not down too much. Beazer Homes, there's one that was an outlier, but Beazer Homes is only down 0.9. You have DR Horton down 1.2. You have Lennar down 1.1. But there is one company, Pulte Homes was down 0.7%, but TriPoint Homes, T as in Tom, P as in Paul, H as in hotel, they are down 8.1% today. I have to see why. I haven't listened to like any of their earnings calls or anything like that, but it sliced through the 50-day MA today like butter. So there must be some news here. I'll dig a little bit and see if I can post what I find tomorrow. And then when I look at IYR, which is mostly commercial real estate, that's down 2.24%. But the XHB, which is the builders, hasn't really budged. It would close down 0.12%. But if you look at the chart of XHB, it looks like it's just basically fighting its way back to its all-time high, close to 85. We'll see if it can somehow boost through this level. With that said, I don't have much else to cover today. Thank you again for tuning in to NYU Grad Substack, as well as the podcast. I will see you on the next episode.